So hello guys, welcome to the Genius Trader channel. My name is Genius, and today I'm going to make a trade recap of a trade I took on Monday on 22nd June 2026. And let's head over to the charts. I'll be showing you how I took a trade on the US 500 or the S&P 500, which is a UX index traded by most traders or many people. So first of all, I'm in the 4 hours time frame, and as you can see, we are on a downtrend, so expect the price to move downwards or to proceed with the downtrend. So first of all, there's a downtrend. As you can see, there's a downtrend. Then if you come to the 1 hour time frame, the 1 hour now, let me remove this trade line. Then on the 1 hour time frame, you can still see that we are on a downtrend. Now let's head over to the 15 minutes or the 5 minutes time frame. The 5 minutes or the 15 minutes is the ideal time frame that I like to trade. The 15 minutes time frame. So it was on a Monday. So I was looking for the price to trade above this relatively equal. Let me mark these relatively equal highs that were printed on Friday. So this is the first point of liquidity. So this becomes our liquidity. The next step is to wait for the price or for our price to trade or to run over the liquidity and reverse its direction. So you can see these were the relatively equal highs. Then, and this was on Monday. Then I also forgot to mention that you should look for liquidity run exactly after 9:30 a.m., which is New York market open. Immediately after 9:30, as you can see, as I predicted, the price ran over this liquidity or this relatively equal highs and changed direction. So I switched to the 2 minutes time frame to look for the setup, to look for the entry, or to look for the entry. In the 2 minutes time frame, you can see the price has already reversed or changed direction from an uptrend to a downtrend and violated or broke this high. After breaking this high, the price also printed a fair value gap. Let me mark the fair value gap. This is the fair value gap. The fair value gap is the first thing I look. Is the first confirmation I look when entering a trade. This is the first fair value gap. You can see. Then after breaking the uptrend or breaking this high, you can see there was another fair value gap here called an inversion fair value gap. I'll not explain what is a fair value gap today. I'll explain in details in another video, guys. So make sure that you subscribe and like the channel for you to get notified when I upload such videos. So the price not only broke this high, which I've marked with the line, but they also created another fair value gap and ran over this fair value gap created during the uptrend. After the fair value gap, You can come to the 1 minute. I came to the 1 minute time frame. And in the 1 minute time frame, this is where I spotted the perfect entry. You can see there was another fair value gap here in the 1 minute time frame. Here, a fair value gap is created when 3 candles form, creating another gap in the middle, or in the middle candle. This is the inversion fair value gap. So what I did, I took my entry here. Stop loss just 12 pips. This is the US 500 or the S&P 500. Then I was gonna target the previous day low. This is the previous day low. And if you follow the ICT, you know that the price will move. Or the day's high. Let me target the day's low. And if you follow the ICT, you know the price moves to seek liquidity or to fill inefficiency. And liquidity can be in the form of the previous day highs, the previous day lows, equal highs, equal lows, or the day's low or the day's high. In this case, this is the day's low printed during the Asian time. And X expected, after creating the fair value gap and changing direction or change of character, the price ran over to the day's low. And this was a very, very nice setup, what we call a book setup, using the ICT model. So as you can see, guys, all the parameters of entering this trade were met. The price ran over these relatively equal highs, which I expected. We had already seen that the market is in an overall down trade. After these relatively equal highs were violated, the price changed direction. And one way of confirming change of direction or change of character is when the market runs over the relatively equal highs, breaks a current high to show change of direction, creates a fair value gap, and violates or fails to respect an inversion or an inverted fair value gap. And this was a 1 to 4.5 risk reward. Thank you, guys. Thank you for watching. I'll be uploading similar videos in the future, so stay tuned, like and subscribe and share. If you have any question, you can write to me in the comment section, or send me a direct DM, which I will read and respond to you in earnest. Thank you, guys. Be brave.